Okay, welcome everybody who's not here if you actually watch this. Hi. You need to watch this too. Yeah, we're going to do investments. Has nothing to do with 211. We'll do it. I don't have a copy of that. Can I borrow one?
I have like five.
Oh, good
I haven't
man.
been to print so many.
Good man. What's that mean? They won't go to 3 tonight?
I guess we just have
Anybody
to
else need one? You got copies?
the first three, because,
Want to do the first 3?
yeah, because you said 4 is the next chapter.
Yeah, chapter 4 is the next one, and chapter 5 is the cash flow problem that I cut and pasted on. That's right, no problem with chapter 5 there. So yeah, let's do the first 3, and that'll get us through investments in other companies, I guess.
Can we do a cash flow?
Sure. Yeah, then we'll do a cash flow. Okay? All right, so first is Kerry Corporation. Purchased 2,000 shares of outstanding common voting of Fonzie at a cost of $9 per share. So it's 2,000 times $9, right? $18,000. Is that what that is? All right, then Kerry plans only to hold. I guess plans to only hold the investment for 1 or 2 months. Okay, and then there were 1 million shares outstanding. They're buying 2,000, so I don't think they have a very large percentage. Do you? What kind of an investment is this? Investment in what? That's less than 1%, isn't it? That's a little tiny percentage. 2,000, never million. Well, what do you think? Real small. How much control do we have? No control. Then what do you want to know? After you know there's no control, what's the deal? How long you're going to hold it, right? What if it's over a year? It's available for sale long term. What if it's less than a year but more than a few days or weeks or so? Available for sale short term. What if it's only a few days, a day or 2 or a few weeks? What is it then? Trading securities. You people are not ready yet, okay? You got to get this down. All right? That's why you're here, you're not ready. So, okay, so these are trading securities. Everybody agree? Let's do the categories again.
Yeah.
All right. The decisions you're going to make. One is how much control you have, right? If you own between 1 share or any amount of bonds or something, between 1 share and what percent? Yeah, about 20% we use as a rule of thumb. We think you have no control because when we vote, you lose, right? Okay, between 1 share and 20% of the outstanding stock. Right, everybody? And what do we call this investment? It's an investment in what? 3 different categories within that. What would it be? Trading security. When is it a trading security?
When you're going to get rid of it within a couple weeks.
Yeah. So, 1 day, let's just say up to a few weeks, huh? That's what people do. Okay? It's a judgment call, but that's what people typically do. All right. What if I'm going to hold it for more than a few weeks, but less than a year? So less than 1 year, but more than a few weeks. Yeah. We're going to call it short term, but what kind of short term? Investment in? No, trading securities means it's only a few days, up to a few weeks. Available for sale securities. Right? Available for sale securities, short term. Remember that? Okay, you're not supposed to remember this. Don't worry about it. You probably didn't have it in your class. Okay, 101 here. That's okay. You'll struggle in 212 or wherever this is. It'll be just fine. Yeah. Okay. Anyway, they'll do it like you already know it. Okay, and then what if it's more than a year? Yeah, it's available for sale long term. You got to know that. Okay, those are the 3 categories. What determines it? No control. And how much time you held it, right? Okay. And what method are we going to use for all of those? Market value. I'm going to mark to market, we call it. I am going to adjust to the market value at the end of each year. Okay, so I have gains or losses, unrealized ones on the change in market value. Right, guys? Okay, and then I'm also going to have dividend revenue. What am I going to do when they report earnings? Celebrate it for positive. Feel bad if they're negative, if it's a loss, right? But I'm not going to make a journal entry for it. Okay, what's the next category? 20% to what? Okay, I do not have control yet, do I? Because I don't know more than 50%. When we vote, I don't win yet, okay? So what would that be? Significant influence, you got it. And typically, you'd be holding these for a long period of time. You're not going to buy 30% of the stock of a company and then sell it in a few days. Oh my gosh. Okay, you're holding it long term typically. Because the bottom will fall out of the stock price if you do that. You lose a lot of money. Okay, so what do we call these things? Investment in what? Affiliates. Affiliated company. I did this with you people. How come you don't know it? Yeah. Anyway, investment in affiliate. I love doing that with executive MBAs. We get them all the time about knowing everything I stuff. What is that about? They should be able to pull that off. Yeah. So should you. Okay, and investment in affiliate. And what we're going to do here is we're going to use the equity method. Okay? What the equity method is, guys, is I am going to keep track of my share of the equity, right? As they earn. That's my income, whatever portion of the company I own, right? I'm going to record it as income on my income statement and increase my investment. When they pay a dividend, it's not dividend revenue to me, it's a reduction of my investment. I'm just paying myself a dividend, basically. Okay, and then when the market value changes, I'll be happy if it goes up, I'll be sad if it goes down, but I don't make a journal entry. Okay, you got to get this stuff. And what if it's over 50%? I have control, of course. And if I have control, I'm going to call this company a subsidiary. I'll be the parent, they'll be the subsidiary. And the subsidiary doesn't really exist when we combine our financial statements. We call it consolidation. And here, we just combine our assets, we combine our liabilities, we eliminate their equity, right? Eliminate the investment in them, maybe put in a minority interest, maybe adjust the value of some assets, and that's it. We combine our revenues, combine our expenses, eliminate anything that's intercompany, where I'm doing business with myself, right? That's it. Okay, those are the conceptually. So you got those, you guys? Got the idea of what we're going to do. All right, so let's give this a shot again. Don't do that. Did it die? No, there's none. Oh, good. That's nice. Let's start now. Okay. So read this again now. You slide into all that. They purchased 2,000 shares. There are 1 million shares. Is that 20%? No, I don't think so. Tiny, isn't it? Okay? So it's like 2 out of 1,000, whatever that would be. 0.2%? Okay. So what do you think, you guys? No control. Certainly no control. They're only going to hold them for a few days. What do you think? It's a trading security. Just like that. See how easy this can be if you know it, right? Okay. And then they paid $18,000 for it. Okay. So what are you going to do at December 20th, right at the beginning there? What are you going to want to do? Debit what to December 2nd? Year A, I guess. What do you want to debit? What'd you invest in? Trading securities. All you got to do is say trading securities or investment in trading securities. Okay? Either one's fine. It's an asset.
Is it only up to a few weeks or?
Yeah, up to a few. So this says a few days, right? Or 1 or 2 months. So yeah, but it's still real short. Still real short. Yeah. So yeah, a few weeks, a few months is okay. Yeah, but not getting up long period of time. I should have made it even shorter than that, to be clear. Yeah, but okay. So I'd call this trading securities, right? Yeah. Okay. And if it was longer period of time, available for sale short term. If it was over a year, available for sale long term. Everybody good? Okay. How much is it? 18,000. Everybody agree with that? 9,000 times 2. 2,000 times $9. Okay, and what are you gonna credit, of course? Cash. Always get the easy points. Okay, so we're on our way. Then it says, give the entries required on December 31st also. Well, let's see, you're in the reported income of 700,000. What am I gonna do with the 700,000 income, seeing as I didn't make the income happen, I have no control? Nothing, no entry for that. So you don't have to say anything, just do nothing, okay? But they declared and paid an $180,000 dividend. What'll I do with that? My share of it, I'm gonna receive in the form of cash, debit cash. And what do I call it? I earned dividend revenue, dividend income, huh? So credit dividend revenue or dividend income, sound good? How much? What is it per share, you guys? It's 180,000. There are 1 million shares, right? So take 180,000, divide it by 1 million. So 180 divided by 1,000, I guess. What's that, 18 cents a share? Okay, 18 cents a share, how many do I own? Take 2,000 times 18 cents. You guys can do this. 360? Okay, that's it. So I have dividend revenue of 360, okay? So the key thing, if it's a trading security or an avail for sale short-term or long-term, the dividend is dividend revenue, right? This is a dividend. It's dividend revenue for them, okay? What do we do, and what did we do with the reported net income? No entry, right guys? No entry because I have no control. Everybody good? Okay, and then what do we have left? Well, the change in market value. The market's $8 at the end of the year. It was $9. There's 2,000 shares at $8. What are they worth right now? $2,008. 16,000, right? So what do you want to do? I want the trading securities to only be 16,000, don't you suppose? Because I want to adjust to market value. That's it. Okay? So these were at, I guess, December 31st. They did the dividend. December 31st. They're also doing the change in market value. So I'm going to take trading securities when it's in a loss position. I'll credit trading securities. If they had a gain, I debit it. Does that make sense? How much is it? They lost $1 a share on 2,000 shares, you guys. 2,000, right? Debit what? What do we call this? What is it? Unrealized, because I haven't sold the stock. Loss on trading securities. Unrealized loss on trading securities. Ta-da! Now, because it's a trading security and I'm turning them over really quickly, where does the loss go? On my income statement. That's an income statement account. What if it was an avail for sale one? That would go on what? My equity statement as other comprehensive income. Remember that? We still call it the same thing. It'd still be an unrealized loss. If it increased in value, I'd have a credit to an unrealized gain, right? And debit the asset. Everybody staying with me on this? Pretty straightforward? And we're done. We're done. That's number one.
Say unrealized loss.
Unrealized loss on trading securities. How long would it take you to get 1, 2, 3, 4, 5, 6, half a point for each of those? It's right down 6 lines. Come on, not really, right? Okay.
Why is it unrealized?
What does realized versus recognized mean? Recognized means I record it. Realized is I get the money. I realize a gain when I get paid, or I realize a loss when I get paid, or pay for something. I realize revenues when I receive the cash. I realize expenses when I pay out the cash. That's realization. So it's unrealized because I didn't sell the stock. And that tells people I didn't sell the stock. It's an unrealized gain. I'm holding the stock and I have an unrealized gain that I recorded, or unrealized loss in this case that I recorded, right? That's all that means. Make sense?
Yeah.
So it communicates, right?
Yeah.
recognize versus realize. Realize there's a cash change
I
thing.
feel like for that part, I would have put,
Loss.
I think I would have done something to like discount, like call it a discount.
Oh, no, and they're not really doing that though.
Yeah, I know.
Yeah.
But if you sell it, would we have a problem? So
If-
we sell it and we realize it.
If you sell it, then you realize it gain loss on that. Yeah, if we actually sold it. No, I won't go there. It gets a little more complicated. I won't do that. Especially on the bail for sale ones, it does, because you have this other comprehensive income account sitting there. So if you sell it, you have to get rid of that. And it changes the gain and loss. Yeah. On this one, wouldn't be too bad on a trading security. You just record the gain or loss at that time. So, okay. So let's try another one. Now, what is this one? January 2nd, 28, Pod Company purchased 70% of Sod Company. That makes Sod, you like my clever name? That makes Sod Company a what? Subsidiary, and Pod is a parent. You know, P and S, wasn't that clever? Okay, yeah, even named them appropriately. For 200,000 cash. So they got 70% of it for 200,000 cash. Provide the entry to record the purchase is the first thing they ask you to do. So what would you do? What'd you give them? We purchased it. I'm sorry, Pod Company. We went Pod Company then. What would Pod do? Actually, Sod would do nothing, because Sod didn't sell the stock. He bought it with stock. Okay, so the parent does what? They give him cash. What would you do? I think so. How much? Yeah, if that's what you gave him, I think that's what I'd do. Okay, and then debit what, you guys? What'd you get? You bought a company, which you call a, no, affiliates if I own less than 50% with 120 subsidiary. How about investment in subsidiary? You like that? That's what it is. And what's the subsidiary's name? Sod Company. Okay, whatever. Okay, you got the idea? Debit investment in subsidiary dash Sod Company, something like that. Okay? And then credit cash. So that's what I do when I bought it. And now I want to know how much goodwill there is and what the elimination entry would be if I consolidated the statements on January 2nd. So immediately, right? I bought it January 2nd. I'm going to consolidate January 2nd. So nothing happened. It's more complex if things happen in between. You buying from each other, selling to each other, that kind of thing. At this date, the book value of Sod Company's assets included land that had a book value of 70,000 and a market value of 76. How much are you going to want to increase land? When we do this elimination entry, how much do you want to increase land by? Land, yeah, I'm going to increase land by 6,000. I don't know about you. Only in my elimination entry, not on the subsidiaries books, just in the elimination entry. Okay? Their equity is 90,000 common stock. Are you going to want to eliminate that, seeing as they don't exist when you consolidate? Of course you are. Okay, that's on the subsidiaries books, right? The land's on the subsidiaries books too, but I want to increase it by 6 in consolidation. Okay, so I'm going to add their 70, and I'm going to increase it by 6 to get it up to 76. And then they had 160,000 of retained earnings, so I guess there's no additional paid-in capital. And that's fine. You don't have to have additional paid capital, I guess. Okay? Okay. What I've got is this is what is the equity on the subsidiaries books. But we can't calculate it until we know what we bought. So I'm buying this equity. Their equity is $250,000, and I paid $200,000 for 70% of that equity. Right? This was 70%. So I bought 70% of their equity. Everybody with me? So their equity is 250. My share is 70%. So what's 70% of 250? What's the parent's share? That's what? Okay. Okay, that's what I bought. I gave 200,000 for that. Everybody agree? What's the minority shareholder's share? This is the parent's share. What's the minority interest going to be, you guys? There's going to be a minority interest because I only own 70%, right? Somebody else owns what? 30%, other people. So what's 30% of 250? I think it's 75,000. I already know what the minority interest is, you guys. That's it. That's the portion I don't own of their equity. Okay, so what I want to do is I want to say, all right, my cost on this asset, right, this investment, is $200,000. Does everybody agree? That's what's in the investment account. And that's on the parents' books, and we're going to eliminate that too. We're going to eliminate all the equity on the subsidiaries' books. We're going to write the land up. We're going to record the minority interest. And we are going to eliminate the investment in the subsidiary. Okay? So my cost is 200. My share is how much? My equity, my portion of the equity is how much? 175. What's the excess I paid over 200 over 175? How much is that? I paid 25,000 more than its book value. You got it? Everybody agree? What'd you pay for? Oh, the land's worth more and goodwill. Got it. So this is how we get to goodwill. The increase in land is going to be how much did we say? 6,000. And the goodwill is how much? The plug number, or in this case, $19,000. You guys see it? Not too bad, is it? Okay, so let's write a journal entry for it. This is on no one's books. That first entry is on the parents' books, right? This one's on the parents' books, on POD. Right? That's on the parents' books. Everybody agree? Because they made the investment. These accounts are on the subsidiaries' books, right? But when we combine the companies, they're going to be in the consolidated financial statement. So let's do our elimination entry. Here we go. Again, what do you want to eliminate, everybody? I want to eliminate the investment in myself. Because I'm putting the two companies together, what would I call it? Investment in myself or something? Yeah, there's no such thing. So investment in subsidiary has to go away. How much?
30%.
Well, no, not just the minority interest. My investment, I want to go away. When I put the statements together, I want the whole investment to go away. How much investment do I show on the parents' books? 200,000. How much do you need to get rid of? All 200,000. I got to get rid of the whole investment of 200,000. Okay? So credit investment for 200,000. So when I add the companies together, the parent and subsidiaries, there's no investment in myself, right? All becomes one company when I put the worksheet together. Does that help? Everybody getting that idea? You got to eliminate it. And then what did I own? I own all the stock. Well, I own 70% of the stock of the subsidiary. I'm going to get rid of all of those. Okay? So how do I do that? I get rid of the common stock, right? The common stock's 90. It's a credit balance. You debit it for 90. It's gone. Now this doesn't go on anybody's books because investment in subsidiaries on the parents' books, common stocks on the subsidiaries' books, so you can't go on anybody's books. This is just on a worksheet, okay? To put together the consolidation. And then what else is there for equity in the subsidiary? 160 of retained earnings, right? Now, if I owned 100% of the company and I paid book value for the company, I'd be done because my investment would have been 250, right? If I owned 100% of it and I bought it for 250, I'd be done. That would be it. I'd debit the common stock, debit the retained earnings, and credit investment in subsidiary, and I'd be done. Odds of that happening. What else do I have to record? I want to record what? The minority interest. How much is that? Yeah, so now I'm even further out of balance, aren't I? Right? Well, no, I'm not. I'm less. It's 250 less 200. Now I need 25 more debit. What's it going to be? Let's increase the value of the land, you think? How much? I want it to be 6,000 more, right? Because the market value is 6,000 more than their book value. So when I add the land together, I'll add the 70 to the parent's land, and then I'm going to add 6 to it. Got the idea? Is it higher? Now what else do I need? Goodwill. My reputation, right? My customer base, my employees, my suppliers. Does that journal entry balance? You bet. All I did was copy this stuff in there, didn't I? Everybody agree on the minority interest? Can you do it? This is when I own what? More than 50%. If I went to 100%, there'd be no minority interest. You don't have to worry about it. It'd look exactly the same, you just wouldn't have the minority interest. Okay. Everybody good? Try another one. Okay. Do number 3. Everybody looks so tired. You guys have to quit having fun. Sleep a little. Huh?
How was your investment at Hockey?
I like that. That's good. I should have too. Top Corporation bought 40% interest. There we go. 40% interest. Where are we? Significant influence. I'm going to call it an investment in a affiliate. Yeah. See how easy this is?
Easy.
Gosh, when you know what you're doing, things are easy. It's just amazing how that works. Okay. So investment in affiliate is going to be the debit. How much do they spend for it? And you could say investment in affiliate pop company, right? Okay. 40%, it's $1 par value, 4 million. Go for $4 million. Well, I guess I know how much it is. 4 million? Everybody agree? Credit what?
Cash.
Cash. There's part A. Please don't miss any of these first entries, huh? Let me give you the points. They're easy, aren't they? You can identify how long they're holding the stock and what portion they own of the stock. Okay, and then it says it's $4 market price. Okay, so fine, $1 million at $4 is 4 million on March 31st. So this was 12/31, right? Fine. On December 12th, they paid a 1.8 million dividend, and then they reported net income, and then they tell you what the stock's trading for. Okay, what do you do with the change in market value? Seeing as we are going to use now the equity method here, right, guys? We're using the equity method. Why? Because we help control the company, don't we? We help run it. So our share of their earnings is we're going to record the income for us and increase the investment. Our share of the dividends is just paying ourselves a dividend because we voted to give ourselves a dividend, right? So what do you want to do here with this thing? The change in market value, what do you want to do? No entry. Don't do an entry for the change in market value when you are not making that happen. Okay? What did we do when it was a trading security or an available for sale security? We recorded a gain or loss for the change in market value, but what did we do with the net income? No entry. See the difference? And the reason is here I have control, significant influence. I have significant influence, so I'm helping run the business, right? So I earned the income. That's what we're saying. Okay, so let's do, they said that there's a dividend. Let's do the dividend part. If it's 1.8 million cash dividend and I own 40% of the company, how much did they give me? Or I really gave it to myself, I suppose. $1.8 million times 0.4, right? How much is that? 720,000 bucks. What did I pay to myself? What did the company send me? Cash. I didn't literally pay it to myself. The company sent me.
What did you get, 720?
She took 80% or 40%, I'm sorry, of 1.8 million. 1.8 times 0.4. That make sense? Okay. Or you could take the 1.8 million and divide it by all the shares. No, they didn't tell us all the shares. That'd be a pain. We'd have to compute how many shares there were first, which we could do because we know 1 million is 40%.
There's 1 million shares.
That's how many we own. There's actually 2.5 because we have 40 million. So if you took 2.5 million into 1.8 million, you'd find out what it was per share. Then take it times your million, and you'd find out it's 720. 72 cents a share. Okay, but don't do that. Just take 40% of it. Okay, so that's what we do. Okay, here was the investment. Here's the dividend, right? Oh, we didn't finish. What would I credit? It's not dividend revenue. I just gave myself back part of my investment. Credit investment in affiliate. No kidding. So what I'm doing, if you think about the investment in the affiliate, I put in the 4 million that I bought it for. See that? And then I paid myself a dividend of 720,000. I took it out of there. So here's my investment. Here's my dividend I effectively paid to myself, right? I have 40% of the vote. Then what I'm going to do is I'm going to add my share of the net income and find out what my investment's worth at the end. Okay? But I should have it recorded for at the end. So what do you want to do, everybody, at December 31st? It tells me they earned how much? 5.2 million. How much did I earn? I control 40% of the company, you guys. What is it? 5.2 million times 40%, right? How much is that?
$2,080,000.
Okay. What do you want to debit and what do you want to credit? What happened here? I think I earned that much. It's net income from affiliate or equity interest in earnings of affiliate, right? Something like that. So earnings from affiliate. It's going to be, there's all kinds of names people use. It's going to be added to my income statement, okay? Earnings from affiliate gets added to my income statement. That makes sense? I made that happen. I'm making 40% of the decisions. I get 40% of the income. Is the theory. Okay? Significant influence. And what do I debit? I made my investment in the affiliate more valuable. The affiliate might not even be publicly traded. We might not know what the market value of the stock is. Does that make sense? In real life.
Is this entry on number 3? The year-end entries?
Yes. Yeah. So this was number 1, part 1. This is part 2. This is part 3. Yes. Okay. Investment in affiliate, and we'd say pop corporation again. So what happened? I invested 4 million. I gave myself a dividend of 720, and then I earned 2,080,000. What's my ending balance in the investment? 4 million plus 2,080,000 less 720, huh? $5,360,000, is that what it is? Or 340? Is that right? Yeah, 60. You're right. 5,360,000. That's it. Okay. Yes.
So, Rich, how do you really need to make that key count?
No, you don't need. You're just showing you what's happening. I guess if I ask for the ending value, right? You might want to do it. Okay. Easy, huh? These aren't too bad. Again, on the first problem, what would you do if it said they were going to hold it for, say, 10 months? Did it debit trading security? You would debit. Did it sell short term? What if they're going to hold it for more than a year? Debit, they'll sell long term. That's it. And the only other thing that's different is obviously instead of debiting or crediting trading security for an increase in value or a decrease in value, it'd be able to sell short term or long term, right? It's the same thing. It could still be an unrealized gain or an unrealized loss, but on a bill for sale securities, where does the unrealized gain or loss go? On the equity statement in other comprehensive income, it's an equity account. Where does it go for trading securities? On the income statement. That's it. So, should we do the other cash flow statement? Just for
Number
fun.
number 4 is not on the test, upstairs.
No, it's not. That's if you keep it though, because that's going to be on the test and the final. I'm not putting any of chapter 13. Are you interested in analysis chapter on it? Okay, it's not going to be on the quiz. But it will be tested on the test time. I wanted to save the time. Okay? And have more time then between the quiz and the test that way. Right? There's a chance. All right. So let's try another cash flow problem. Keep sick of cash flow. Here you go. Got it. Let's do 1610. That's the one we didn't do in class today, huh?
That one was easier too than the one we did in class.
It's not really easier. It seems easier because we have real financial statements. And isn't it fun that you can now read real financial statements? And you prefer to have them? Well, no, but you prefer to have them over not. Don't just give me a bunch of numbers. Give me something that means something. Yeah.
On that one, you don't have to make it pretty easy.
Yeah. Okay, gang, here we go. Cash flow statement, right? It's still recording, I guess. Okay. Cash flow statement, let's do it. What do you want to put at the top? Please remember to do this. I hate not giving people points when they fail to do this. So Eaton Company, of course you'd spell it out. Okay, on mine I don't care, in real life you would. And then what do you want next? Well, they call it a cash flow statement or a statement of cash flows. Sound good? Then what do you want? For the year ended. What year end are we? I don't know, it didn't say, yeah, it is December 31st, isn't it? So we'd write out December 31st, 2002, you like that? Okay? There you go. So get those points. All right, and then what do you want to do? What are the three sections, gang? So put operating or operations at the top, at either one. Operating activities or operations, right? Either one. At the top. Then go down about half the page and put what? Investing comes second. They're upside down, really, in terms of what you do first. First you do the financing, then you do the investing, then you do the operating. So they're kind of upside down. That'll help you keep them in the right order. Okay, investing, and then what's the rest? So I'm about 3/4 the way down the page now. So you get it, you know, on one. I'm just putting them side by side because I don't have enough room. Okay, and then these three sections are going to all add together and get what? Change in cash. Sound good? And then I'll add that change in cash to the beginning cash, and what is that going to, of course, give me? Ending cash. Okay? And this just kind of gets, after a while, sort of mechanical, but you have to think too. You know, don't quit thinking. Don't mess you up. All right, let's do cash first, huh? And then we can check cash off and we know what the answer is going to be. Okay, what's the ending cash balance? Changing cash, beginning cash, ending cash. I do it? So what's the ending cash? 4 million or whatever these are, but 4 anyway. Okay, everybody agree with that? What was beginning? What happened to cash? Now, by the way, does cash always go down or can it also go up? Of course it can go up, right? So whatever it is, it is. Okay? All right, and you know what? I put a line underneath that and I shouldn't have. Oh, good. It's a little big. Should have been. Nah, I still took out the wrong one. No, I didn't. Come on, Keith. Okay, change in cash, beginning cash, ending cash. There we go. What's the change in cash? 7. So 7 plus less 11, negative. Okay? Change in cash is 7. Put brackets around it. Less 11 is 4. Everybody got it? Make it look prettier in that place. Okay. All right. Anyway, so we can check off cash, right? What do you want to do next? It doesn't really matter. You can go in the order of the accounts. If you can't remember what to do next, just take the next account and put it where it belongs. So what you need to know is, where do they belong? Where do you put, remember I put up assets equal liabilities plus equity, revenues less expenses. I know you've never seen this before. Is net income, right? We did this. And then I asked you, where do you put the current assets? Where do you put the non-current assets? Where do you put the current liabilities? Where do you put the non-current liabilities? We did that, didn't we? And then equity's all non-current, isn't it? So where do they go? Where do you get your financing from? Who gives you the money to run your business in the first place, of course? Yourself, the owners, right? Contributed capital, huh? So equity goes in here, both increases and decreases in equity, right, guys? Are going to be shown under financing, because that's what financing is. And then what else? You might get the equity holders to put in a bunch of money, and then who else might put in money? Long-term debt holders, bonds, that sort of thing. Yeah, banks. Increases and decreases in non-current liabilities go in here. So if it's an equity account, where does it go? Under financing. If it's a non-current liability, where does it go? Under financing. Got it? Okay, what goes under investing? Yeah, because that's what you invest in, is all the non-current assets. Land, building, equipment, other companies, you name it, right? All your investments. Okay, good. And we're going to show both increases and decreases in those. And why do we show both increases and decreases on investing and financing activity? Because they're big dollar amounts and not very many transactions, right? How often do you buy another company? You know, how often do you build a building? That kind of thing. Okay? How often do you issue bonds and repay bonds? They're big numbers and not very many transactions. Versus in the current assets and current liabilities, what's the deal? Lots and lots of transactions. How many times do you debit accounts receivable? You're going to sell something on account. How many times do you credit it? Every time you collect on account. You got the idea? Same with inventory, same with accounts payable. So we just show the change on those. And if you think this makes sense, you'll remember it. Okay? So move beyond just doing it mechanically as we go along here. Okay? Really helps. So where are we going to put the changes in the current assets and current liabilities? Why do we have accounts receivable? To get sales. Why do we have inventory? To get sales. So we get the cash. Right? Why do we have accounts payable? Because I can pay later if I want. I like it. Same with accrued liabilities, right? But all of it relates to my what? Operations. So the changes in the current assets go under operating activities, and the changes in the current liabilities go there. Did you realize when we did this, I've got the current assets here. I have the non-current assets, whoops, I have the current assets here. I have the non-current assets over here, right guys? I have the current liabilities here. I have the non-current liabilities over here. And I have the equity there. Is there anything else on the balance sheet? No. You know where everything goes. You got it made. Yes, ma'am.
Oh, when they do one of these, like, do you want us to put the change in, current
No.
asset?
No, not at all. Not at all. You don't have to do that at all. Oh, you might down here, right? You might call it change in the assets, that's fine, right? But over here, nah, you wouldn't have any of that stuff. Don't show any of that. You don't need it. But you need to know it, right? So you know what goes where. Okay? If you wrote it down, I won't take out points, but you don't have to. Okay? All right. So what account do you want to start with? Do you want to just go in order this time? Let's say I can't remember. I remember cash goes first, I put it down there. Where does accounts receivable go? It is goes under operations. You're absolutely right. There it is. And you know what? If you set it up like this, you can't forget either, can you? If you get it all set up in the first place like that, now what? Just plug it in, right? What goes under, where does accounts receivable go? Under current assets, right? Did it go up or down? This one went up. Increase in accounts receivable. How much did it go up by? Looks like 80,000. Do I have more or less cash if I didn't collect my receivables? Less. Yeah. You can just pretend it's debit accounts receivable, credit cash. It's not literally, of course. You collected less than sold. Everybody agree with that? That's why receivables went up. Now you can check accounts receivable. How about inventory? It went down, didn't it? Did it? How much? Yeah. So I have cost of goods sold and expense that didn't use any cash, 35 of it. Or you just say I sold it for cash. Right? I have less cash because I didn't replace. I'm sorry, I have more cash because I didn't replace it. Didn't replace it because I have more cash than if I had. You can think of it that way. So a decrease in a current asset, more cash. An increase in a current asset, less cash. Just pretend you bought it with cash or sold it for cash. It works fine. Okay, now you check out that. How about prepaid expenses? Went up by 2. That's a current asset too, isn't it, guys? So if prepaids went up by 2, what'd I buy them with? Cash. I have less cash. Debit, prepaid, credit, cash. Everybody agree? This is too easy to believe. You want to keep going in alphabetical order? It's just fine. I don't care. Or I'm sorry, not alphabetical. You want to go in account order? Let's keep doing it. Why not? I still don't know what I'm doing. I'm having to figure out each one. Okay? What comes next? Yeah, building and equipment, plant and equipment. Okay? And what goes with that, of course? We depreciate that stuff. What do we use? Accumulated depreciation. And what other account would we have? When I depreciate, what do? Debit depreciation expense. Yeah. And credit accumulated depreciation. I might also have gains and losses on selling assets. Huh? Could have that. Okay, so let's write down everything we know. What do I know about plant and equipment? It starts at what? And you know this is an asset, it's a debit by now. If you don't know that, it's over. Right? So you can see why people end up leaving. Yeah. 420 goes up to 500. They bought at least how much, gang? 80. Could they have bought more than that? Sure, if they sold some, right? Absolutely. Okay, and accumulated depreciation beginning? 70. Ending? 85. Okay. It went up by 15. What's the minimum depreciation expense has to be? 15. Could it be more than that? Sure, if they sold some, right? They sold some assets. Excellent. Okay, so here we go. Do I know anything else about that? Down at the bottom, what do they say? Sold some equipment for 18 that it cost 30, in which there was recorded depreciation of 10. Well, that was the same as the last one, wasn't it? Except they sold it for a different price. So how would you record that? They sold it for how much? Of what? Sure, debit cash 18. What did they give up? How much? Yeah. What do you need to retire if you gave up the equipment? Yes. How much? 10. What was the book value of this asset that you sold? 30 less 10, right? It was 20. Book value means the equipment less the accumulated depreciation, right? That's what we carry that. Carrying value of book value is 20. We sold it for 18. What happened to us? Loss. A loss on sale. Excellent. See, you guys know what you're doing if you just let yourself do it. Loss on sale is 2. If you look at the income statement, is there a loss on sale? Yeah, it's 2. It's a miracle, right? So they already subtracted the 2. Do we want to subtract it twice? No. So I'm going to have to add it back because I want to put this 18 of cash on my statement, okay? So let's go to the statement and let's do that, okay? I want to put that 18 on my statement. Now I have to find my statement. There it is, okay. So what do we want to do? Where does it go? It's a non-current asset, isn't it? Where does it go? Investing. Sale of equipment. How much? What did I sell it for, everybody? No. 18. The cash I got is 18. Is that more or less cash if I sold it for cash? More. I debited cash. I'm just putting the debit there. Okay, so now I've done this one, everybody. You agree? So let's go ahead and post that in here. The accumulated depreciation gets debited for 10. The equipment gets credited for 30. I'm explaining a 20 change there, aren't I? But I only wrote 18 down. I got to explain the whole 20. Everybody see that? See it's a 20 change in the accounts? A credit of 30 and a debit of 10 is a net credit of 20. I've got to get 20 on there, not 18. Oh, the rest is the loss. I need to add back the loss and then I'll have the 20. Okay? You don't want to put 20 as what you sold it for because you didn't sell it for 20, right? You sold it for 18, so I put 18 in as what I sold it for, and I'm going to add the loss on sale of equipment. And we put, fancy terminology, but that's what it is. Okay? Is 2 plus 18 equal to 20 or what? We got it, don't we? Okay? That's the toughest part, probably. Okay, let's keep going. Let's take a look at what plant and equipment has now. It started with 420, I took 30 out. Everybody agree? So now we're what? 390? And somehow it got up to 500. How much did you buy? 110. Do we have it? 110. Okay, so what's that entry going to be? Debit plant and equipment for how much? 110. We just calculated it, didn't we? Everybody agree? We know what we're doing. And we assume we bought it with cash. So do you want to put that one in your cash flow statement? Absolutely. I want to put that 110 on the cash flow statement, don't you? More equipment bought, I have less cash. So let's go back to the cash flow statement and let's do what? Still under investing because it's a non-current asset. Purchase plant and equipment, right? Everybody agree? How much should we pay? 150, and it's cash going out. The journal entry was credit cash, wasn't it? We got that one in there now, okay? So you can see what's happening here. We put this 18 in, everybody agree? And now, whoops, it was 110. What did I say, 150? You guys didn't stop me. I said the last problem. How many of you thought that was a strange number Keith came up with? But he must be right. Stop that. You know it, right? It's 110, wasn't it? Okay. My intermediate students are pretty good at telling me when I'm wrong. True? I said my intermediate students are pretty good at telling me when I'm wrong. They're getting better about it. When they go to work for a partner for a CPA firm, I want them to say, I don't know if that's the right answer. And let them explain it to you. They'll appreciate it if they're wrong and it's going to be screwed up. They'll appreciate it anyway. You got guts.
How did you account for the depreciation?
I haven't done it yet. Good point. Look what we've gotten rid of. We've gotten rid of this 20 here, right? And we've gotten rid of the 110 here. Everybody agree with that? We put the 110 in and we put the 20 in. What's missing? Oh, I need my depreciation, don't I? I debit depreciation expense and I credit accumulated depreciation for some number, right? And I want to add that depreciation expense back to my income because there's no cash used up for it, right? The cash was used up when we bought the asset, not when we depreciated, okay? So let's take a look at this. How much is my depreciation expense? Can you tell me? I started with 70. I ended up with 85. We thought it was at least 15, but wait a minute. I retired 10, didn't I? So how much is it, guys? Yeah, aren't T accounts handy? It's 25. And guess what? That's the debit to depreciation expense. That would be their entry. Debit 25, credit 25, right? Now, it's not that depreciation generates cash, it's that it doesn't use any. Your net income that we're going to list over here, the net income on this problem is what, 56,000? That net income has depreciation expense out of it, okay? And it didn't use any cash. So what do I need to do? Add it back, okay? So I'm going to add depreciation expense. How much did we say, 25? Right? My cash flow is 25 more. This is the biggest source of cash flow other than revenues less expenses, other than net income for companies. When you look at their cash flow statement, if they have very much accumulated depreciation, of course they have a lot more cash flow than they do income, right? You need to value that when you value the businesses, okay? All right, and so the next thing we need to do, see, we did plant and equipment. We did all of it now, right? You guys agree? We've done it all now. We did the 110, we did the 20, and we did the 25. It's all gone, okay? So let's do something else. Long-term investments. What happened there? It went from 38 down to 31, but then down at the bottom it says they sold long-term investments for 12, but it cost 7. So long-term investments is going to take a little bit more work. What happened here? Long-term investments. What did it start at, guys? 38. And it went down to what? It's an asset, right? Non-current asset. It's going to go under the investing section, right? It's kind of nice for investments, but anyway, yeah, okay? Under the investing section. And what happened? They sold some, and they sold it for 12. Let's write the journal entry. See how T accounts are really useful and journal entries are really useful when it gets a little more complex? We know what the entry was, right? We can figure out what it must have been. They debited cash for 12,000, didn't they? Everybody agree with that? And they had cost 7,000 when they bought them. So what would that be? Credit long-term investment. Oh, well, this isn't so bad then. That is the 7,000 reduction there. Everybody agree? So that one's gone. It's 7,000. I want to explain that 7 change, but I want to put the whole 12 cash in my cash flow statement, don't you think? Because that's how much cash came in. But I only want to explain a 7 change to the account. What's the difference here? What's the 5 going to be? You bought it for 7, you sold it for 12. What do you want to call that? Gain. Gain on sale. You got it.
12,000?
Isn't that what it said?
Why is it 12,000?
That's what they sold it for. They said the company, in addition, the company sold long-term investments for 12 that it cost 7. And purchased several years ago. See it? In the dialogue at the bottom there.
Yeah, I just said $12. I gotta stop.
I guess I changed it to thousands. I apologize. I doubt it was $12. It's probably 12 million or 12 billion or whatever. They just made the problem easier, and I just screwed it up. Sorry about that. We don't need that. Just 12. Thank you. It's either 12,000 or 12 million or something. Right? Okay. Everybody good? So what do I want to put on my statement? I want to put this 12 on there, but I want to explain the 7. So what I'll do is I'll subtract the gain because it's an operating income. Look at the income statement. Do you see the 5 gain on the sale of investments in there? I want to put that under investing activities, not in the income, not in the operations. Okay? So how will I do that? Let's go back over here, and under investing, sale of investments. How much did we sell them for, we said? 12,000, right? Or 12, okay? We sold them for 12, okay? And then what? We want it to be 7 on the statement, explain the 7 change. So I'm going to deduct, it's a gain, yeah, deduct gain on sale of 5. What is the difference between 12 and 5? 7. And we've explained the change in the account. They're a little tough to get your head around, aren't they? Especially the plant and equipment with the accumulated depreciation working. Okay? The investments too. Now we can check that one off. Let's do accounts payable. Where does it go, guys? It is A. Accounts payable. Current liability. Where do they go? I have accounts payable for my operations. It goes under operations. So did it go up or down? Up. Increase in accounts payable. How much, guys? 75, is it? Come on. 75,000? So if it went up by 75,000, that means I did not pay 75,000. Right? I have more cash. It's just the opposite of the current assets. If the current asset goes up, I bought it with cash. If the current liability goes up, I borrowed money. I have more cash, right? More cash than if I had paid it. That working? Okay, so it's common sense. You don't have to just memorize it. Accrued liabilities, what did they do? They went down by 10. What do you think you paid it with? I think you paid it with cash. So I have less cash because I paid the bill. That makes sense? 10 less. Okay. What do we count as bonds payable? They didn't say anything about that bonds payable down below, so I guess they just either paid some off or they issued them, one or the other. What kind of account is bonds payable? Liability is payable. Is it current or non-current? Bonds? Yeah, you're going to issue bonds current, right? I mean, it's a big deal. It costs a lot of money to issue bonds. Pay a trustee to sell them for you, and I mean, it's just a mess. You keep track of them, you're paying interest payments on it. Yeah, so it's to borrow big amounts of money for a long time. Okay, so it's going to be a non-current liability over here, isn't it? So it goes under what? Financing. And they don't tell us anything, so we didn't issue some and then repay some. We just apparently issued some, huh? Because it went up. Did go up, right? It's going to be issued bonds payable. So you don't have to analyze the account. But if they had issued 100,000 and then repaid 125, we would show both of them, right? Cash coming in and cash going out. So this is 25,000 of cash, additional cash coming in. Okay? That's what I think. All right. Deferred income taxes, what's the deal with that? We did this last time, or in class today. Deferred income taxes, what would the deal be? I'm going to debit my income tax expense for the amount of expense that's on my income statement. How much was that? On the income statement, how much tax expense do they have? Less income taxes there. How much is it? 24,000 or $24. Nobody has $24. Okay, but anyway, yeah, 24. Okay, whatever it is, thousands or millions. Then what? You're going to credit cash for the amount you paid, and you're going to credit deferred income tax payable for my change in deferred income tax payable. I'm assuming it went up. I think it did. It went up by how much? That was the 8. Good. Let's see. I have expense of 24, but I did not pay 8 of it. I'm going to pay it sometime in the future. It's deferred income tax payable, deferred until later, right? Long-term liability. So how much cash did I give him? Okay, so I only gave him 16 cash, but what do I show on my income statement? 24. So I have 8 more cash than my net income implies. Does that make sense? My net income took out 24. It should have only taken out 16 from a cash basis standpoint. By the way, I'm not saying the net income's wrong. I'm just saying it's not cash basis. It's accrual basis, right? Okay? All right. So let's go back up here. Whoops. Let's go back up here. And let's put in, add back the increase in deferred income tax payable. Wow. How much is that again? 8, was it? That's, wasn't it? Well, let me screw up, you guys. I'm getting a lot of numbers down here. Okay, so now you can check off deferred income tax, huh? How about common stock? What did it do? This is a strange one. It went down from 200 to 160. What must they have done? They either bought back stock or bought it back and retired it. They must have bought it back and retired it. But the equity went down by 40, so they bought the stock back. Okay? It's gone. So what would you do? Under financing, because it's equity, retire. That made this one hard. Common stock, 40. And it's cash going out to buy the stock back. Okay? In real life, it gets far more complicated than that, but that's what we'll do at this point. What account do we have left that we haven't done anything with? Yeah, we've checked everything else off. So here we go, retained earnings. Now, you might have started with this account. What's the beginning balance and retained earnings? But if you don't remember to, it doesn't matter. That's my point of doing it this way. You can do it in any order you want. Retained earnings is what? 92 at the beginning? It's a credit, of course, right? It's equity. What's the ending? I think net income was at least 40. What do you guys think? Got to be at least 40. If this is the beginning, this is the ending. Remember the first day of class I showed you this? It might be dividends coming out, and what would come in? Net income. What was the net income? No, that's how much it changed by. What was the net income in the income statement? So what must the dividend be? Because 40 is how much it went up by, and you put 56 in there. It's got to be 16. And they even told you that, didn't they? They didn't have to. Obviously, the dividends have to be 16. Okay, I want to explain this 40 change on this account, don't I? How am I going to do that? I'm going to put down the net income, and I'm going to put down the dividend. And when I do both of them, that'll explain the 40 change, won't it? Okay, on the dividend, did you pay the dividend or receive the dividend? You paid it, of course. Debit retained earnings and credit cash, right? So the dividend is going to be what? On my cash flow statement. What am I going to do with the dividend? It goes under what? I'm paying it to the owners. Where does it go? It's equity. Where does equity go, everybody? Financing. Okay? So dividends paid. That was 16,000? Yeah. Okay, and then what? The net income, where does it go? under operations, and it should be the first item under operations. I bet you'll remember to do that first, actually. How much was it again? 56? And that we add, of course, because I have more cash than any positive income. So it's 56 less 16? It's the 40, isn't it? And we're in great shape. Now check off retainers. You've done every single account. Add them up, and you can check to make sure that you put all your brackets in right. Did all your math right. Did everything work out? Do we have a -7 when we get done? So 56 plus 25 plus 2 less 5 plus 8 less 80 plus 35 less 2 plus 75 less 10. Get the idea? Do them all. No, it's not. You practice, 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 practice. On Friday, we're doing more of these.
Cash flows?
Cash flows and investments.
So it'll
For
be
the
like
quiz.
just practice.
So
We're not learning anything
if
new
you
on
guys
Friday.
work, nothing doing Friday. If you guys really work on these between now and Friday and come in with a few questions, you'll have it wired. When you do the quiz on Monday one. All you gotta do is put in time. Right, gentlemen, back there? Time. If only there were more of that. My wife's mad at me because she made me go to Florida and goof off.
Did you have fun?
And now I'm working my ass off and come back.
Did you have fun for it?
Yeah, very nice time. Love it. I love oysters. I love
No, it's
seafood.
seafood.
Florida's just, well, oysters are seafood, so.
I know, I'm sorry.
Sushi, yeah. But I don't put oysters in the category of seafood. That's not a sound. Swordfish.
Oysters is seafood.
I know, it comes with the sea.
What else would it be?
But then algae seafood, come on. I love shrimp too, but shrimp has a lot of cholesterol in it, so I stay away from shrimp. My wife eats the shrimp.
You don't know what one for?
Is the sale under investing, I think I might have put something wrong,
Sale.
or under investing the category,
The sale of investments, yeah, but not the gain, right? The gain is over here,
You have a loss?
right?
the gain.
Gain on the sale is under operating. The sale of the investment is under investing. Cash came in from selling an investment. Just like cash came in from selling the equipment, same deal, right? Because I sold a non-current asset. I have more cash than investment. If I bought one, I have less cash. That's all it is. If I sell a non-current asset, that's cash coming in. If I buy a non-current asset, that's cash going out. That's it. Thing that makes it hard is the gain or loss has to go into operating. What'd you get for your totals, guys? What'd you get for the first one?
104.
Good. So that's what the answer has too. So we want to make sure. Okay, and then what do we have under investing?
-80.
-80. Okay, and this tells people where the cash came from and where it goes, right? And then what do we have under financing? -31. So then what you do is you take 104 less 80 less 31. And what do you get? Boy, I hope it's -7. Is it? So it looks impossible until you do it a few times, and then it looks easy. So to overemphasize what happens on this, there's going to be 12 points maybe on the quiz. You're gonna have them.
Yeah, you mess up one thing, if you mess up one.
Well, yeah, but I'm gonna give you partial credit for it. Yeah, so, there are half points for every single number, that kind of thing, right?
Oh, yeah, you'll know when you.
Yeah, so I'm gonna go through and find out which numbers you're gonna write.
This will take 30 minutes.
Well, maybe 10 if you really knew how to do it, but you can take 30 minutes if you want, it's half a quiz. You take 25 minutes. They recommend 45 on it, you see that? If you've never done one before, it takes you 45 minutes. This one's 30, well, the other one said 45, I don't know why, it's not any harder. Questions, comments?
It's only harder to go.
Yeah, what's the line under, 4 Go down under operating. Where's that?
We don't have a gain on these.
Gain of sale, that's the gain on the sale of the investments. I have to subtract out the gain, because I sold it for 12, right? That's the cash I got. But it's only 7 is all we have changed by because its book value is 7, remember? So I want to explain a 7 change, and I've got 12 cash coming in, but this gain is already included in the income up here. I want the gain to be here, the 5 gain to be there. Does that make sense? So I have to take it out here, because that 56 includes that gain. It's the reverse of what we did on the loss on the sale. The loss on the sale I had to add back because I don't want to double count the loss either. So I'm just trying to avoid double counting the gain. Boy, that's hard. I don't know, see the relationship. Go through it a few times and it starts clicking. Yeah. We done? We're gonna do something.
Thank you.
You come to class on Friday though, but study in between, right? Actually do that.
That's hard.
Why do I use freshmen?
I don't know. Why do
She's
freshmen
a
take your,
junior, she doesn't want to come to class.
why do freshmen take
No.
I've
your
only
class?
been here, for 2 years.
I've been here 2 years.
Yeah, I started here too. So,
Oh,
I'm soft.
so you're really soft. You got practice. For your 150 hours, you can use all those transfer credits that you got in, by the way. You don't need to become a county manager. Don't you wish you guys had 30 transfer credits?
I had like
They were all just like juniors, they weren't anything hard.
It doesn't matter. They all count for your 150 hours. They don't care what they're in.
I still have to take the hard ones.
Oh, yeah.
So my schedule is like saturated with classes that are.
I'd like to see that one made it. Like, I did all the spells. Oh, I didn't take one last week. I only took one.
You know how much?
Spelling for that one made it. I was like,
Okay, let me tell you one other thing, because I can tell you're extremely greedy, so. Where'd that go?